In this video, I want to highlight the key benefits of owning common stocks. Our common stocks actually have, number one, a high return potential. You discover that a typical common stock can sometimes even double in price within 6 months to a year. It happens, though not regularly anyway, but it does happen. There's always that particular higher rate of return when it comes to you investing or putting your money in other asset classes, like mutual funds, like index funds, like bonds, like commodities, like hedge funds and other classes and other asset classes. Number two, dividend income. Common stocks actually do pay dividends. When the company does very well, it pays out part of its profits to a shareholder in form of dividends. This concept of dividend is what is applicable to common stocks. You may not really have them in some other asset classes, but it's part and parcel of common stock as an investment vehicle. Number three, ownership of voting rights. When you own the common stock of a company, you equally have the right to vote during the company's annual general meetings on matters that affects the company. Matters like the appointment of a director or directors, the right to equally vote on issues like the appointment of an auditor or the ratification of the appointments of an internal audit committee and other major decisions that involve the companies, decisions like mergers and acquisition, and other decisions like going out to raise capital to fund the company's operations. Sometimes these ideas and this concept, these ideas are put to vote. And as an investor, as a common stockholder, you are entitled to vote in that regards to give your opinion on issues of that nature through your votes. Number four, liquidity. Common stocks are highly liquid in the sense that you can very easily, buy stocks in the market, and you can very easily sell shares in the market as long as you have a brokerage account and you have probably the apps in your phone or a desktop computer. You can trade very easily. You can buy and sell very, very easily, and of course it's hitch free, and by so doing your holdings, your investment, possesses a higher level of liquidity compared to holding maybe or buying a house or investing in real estate. Sometimes it may be difficult to sell your properties, and it might take time, but stocks is not like that. Number five, inflation hedge. Common stock provides a kind of hedge against inflation in the sense that returns on common stocks, historically speaking, have been able to outpace inflation over the years. You discover that the returns on stocks, what you could get maybe as dividends, maybe as appreciation or growth, or compound growth in the stock, usually might be higher than the rate of inflation, and by so doing, you can still preserve your buying power. Number six, diversification. Owning a common stock gives you the leeway, the flexibility, the advantage, the freedom to diversify your investment across sectors, across industries, and even across regions. So you have an advantage, a very important advantage of diversifying your investment across different sectors, and by so doing, you will not be hurt if a particular sector underperforms. At least your investment is kind of you have a safety in your portfolio, and you will not be exposed to market risk, at least to a certain level. Number seven, fractional ownership. When you own a common stock, you are a part owner of that company. Sometimes you may not really have the money, the finance to be able to buy, a given stock because the price could be very, very high. I think I can state an example for us here in Nigeria. When you compare the exchange rate, it might be difficult for you to be able to buy the stock of a company like Amazon. It's selling at a very high price. If you convert it to Naira, it's a very, very huge amount of money. So there's that particular advantage of you buying a fraction of a unit price of the stock. Let's say the stock is selling at maybe, let's say, 10,000 Naira. You can buy for maybe 500 Naira, or even 1,000 Naira, as the case may be. So common stock provides, fractional ownership. You cannot buy the entire unit of share because of its cost. You can buy a fraction of the units of a share of that company. What a wonderful opportunity. That's why in my own case, I was able to get a little bit of Amazon that is doing quite well. And of course, it's not the entire stock per se, just a fraction of it. And that is an opportunity that common stocks provides to common stockholders. Please, I will solicit we notification button, and as well as subscribe to this channel. I think drop a comment in the comment section. It will do a ton of good to me, actually, so as to be encouraged to keep on bringing the content of this nature to you that is designed to keep you educated, informed as a beginning investor or as even an experienced investor. Number 8, tax advantage. You discover that when it comes to tax related to income from common stock, dividends, capital gain tax, capital gains and dividends are taxed at a relatively lower rate compared to other income an investor may get. So that tax advantage is always there. Your salary, if your salary earner, is taxed at a very high rate compared to your dividend as an investor, or the appreciation or the growth you obtain, in your stock holding. Those items are taxed at a relatively lower rate. Number 9, market participation. When you buy stocks, when you own stocks in the company or in companies, as the case may be, you are indirectly participating in the economy. As when the economy does very well, because the market and the economy are sort of linked together, and each of them reflects the progress or otherwise of the other. As when you buy stocks as a common stockholder, as common shareholder, you discover that you are participating in the economy, and when the economy does very well, you stand to benefit, from your holding. It will lead to, an appreciation, in your holding in the market. And then number 8, flexibility. As a stockholder, as a common stockholder, that flexibility is ever present. You could decide on what to invest in, where to invest in, which sector you want to invest, which industry you want to invest in, and even which region. That flexibility is there. And not only that, you're also, you could as well determine the strategy you want to use. If you're comfortable with growth, you go for growth investing. If you're comfortable with income, like dividend investing, you go for it. You want to undertake momentum investing, you can equally do that. And not only that, you can also, have that leeway of investing in any kind of stock you want to invest in. And so this class of stock is very important for us to key into, so that we'll be able to benefit from all these advantages, and by so doing, we'll have a guaranteed way of we working towards our investment goal, and at the end of the day, we'll be able to obtain wealth for ourselves, for our generation, and to be able to meet up with whatever investment objective we have in mind.